Hey there, if you want to be smarter about the 2026 housing market in Massachusetts, then this is the report that you want to watch. So, we're going to go over a whole bunch of stuff, including taking a look at the year that was in 2025, and then talking a little bit about what things look like right now and what that probably means for 2026. So, buckle up your seatbelts. We're going to talk housing for the next few minutes. All right, this is not my first report. If you go back through the YouTube channel, you will find some other reports. One of the most interesting reports that I did last year was the fact that all of a sudden the transaction volume had jumped. In a lot of places, the transaction volume had jumped 20 to 25% higher than it had been for the last 3 years previous. For those who haven't been following along in these reports, one of the themes has been that the 10-year average in home sales is about 50,000 single families in Massachusetts and another 20,000 condos every single year. But that's not how it's been for the last 3 or 4 years. In fact, we've been selling somewhere between 25 and 30% fewer houses over that period of time. Well, you might be saying, well, if nobody's buying these houses, how come prices are still going up? Well, the problem wasn't that people weren't buying the houses. The problem was that there weren't enough listings to go around. And that probably feels very painfully obvious. But as we got into June and July, we started to see that things had changed. All of a sudden, there was some inventory sitting around. Not a lot, not like a normal market, not like a balanced market or a slowly rising market, but there was more. Was it enough? Had the tide turned? Well, in one of my 2025 reports, I declared the end of the pandemic market, and that still looks to be true. But first, we're just going to take a look at the numbers of how 2025 shook out. And I'll throw the slide up here. And what I have is 2023, 2024, and 2025, and you can see all the sales there. Now, I mentioned that by the time we'd hit July, I think, uh, there had been a 25% increase in the number of sales to that point in the year. But that all changed. In fact, we only ended up 6% over the 23 and 24 numbers, which isn't very much at all, really. And if you look at the condos, well, we really just ended up a smidge over where we were in 2023. I have to tell you, when I ran these numbers, I was not very encouraged about the idea of a stable market or a flatter market heading into 2026. If you're thinking about buying, these numbers are not encouraging. These numbers mean that a tight market is still with us, that there's not enough sellers maybe to go around and to keep prices from continuing to climb. But there is some good news. So the good news is when I took a look at the market as it stands in a number of towns right now. And unlike January last year or January the year before that, there's inventory that is still on the market and it's not selling. And a lot of this inventory has been out there for several months. In some towns, the average amount of time that these houses have been on the market is well above 90. It's 100 or 110. And the idea that anything would sit around seems very strange if you've been living, as I have, in the pandemic housing market of the last few years. We simply haven't had anything that sat around at all. If somehow a seller mistakenly priced a house too high, they would just cut the price until it sold, and really, by the time 30 days were up, it would be gone. But that's not the case anymore. Some sellers are really holding out there for prices which, quite frankly, they can't get. Now, what's interesting is I have gone through some of the actual listings that are out there, and the numbers and facts are always interesting, but I was sort of like, well, what really is out there in January that's been out there for 100 days? And I have to tell you, the stuff is not very nice. A lot of the stuff that's on the market now has a lot of problems. And you might look at me and say, well, Matt, that makes sense. The stuff that nobody really wants because it has a ton of problems, that stuff is always sitting around. But the big distinction here is during the pandemic, it was not sitting around. It didn't matter what you had or how bad it was or how many flaws or problems or things it needed fixed. You could find buyers for it in the pandemic market. That market is gone and it's not coming back. which means if your property has a ton of risk or it needs a ton of work, which is another kind of risk, it's probably going to need to come in based on where the comps are, and it's going to need to be competitive with the stuff that's nicer that when it comes on. And the way that you make those adjustments is through prices. It's a really hard concept, I think, for a lot of sellers to understand, especially because they use other kinds of metrics to sort of value their own property. But at the end of the day, buyers really do care about risk, and risk comes in a whole bunch of forms. And the fact that the risky properties are sitting on the market right now tells me that the buyers have had their full of risk, and they're willing to wait until more properties come on this spring that have considerably less risk attached. What that means is that the properties that do come on that are in good condition and are in good locations, they are going to sell right away. So it's going to be similar to the pandemic market in that there is probably a backlog of buyers who are looking for these nicer properties. But the risky ones are going to have trouble selling. And we know that already because they're already having trouble selling. And when new inventory comes on, it's not going to make them look any more attractive. So there's a lot of properties out there that do need to be cut. And what's really interesting is quite a few of these properties are new construction. New construction is not selling anywhere near at the frenetic pace or the frenetic prices that it was getting just 2 years ago. But as is often the case, builders are usually very reluctant to cut prices along with the market when they can't get the premiums. Now, I could and I would argue that some of the premiums that the builders are getting during the pandemic market weren't really very good prices. Yes, they found buyers for them, but relative to where that stuff would normally sell, it looked really high on paper to me. Having said that, they did get those prices, but now they're in a situation where they're trying to get those prices now, but in a much more competitive market, it's much harder to do so. The other part of the market that we might be talking about going forward is, well, what about interest rates? Are interest rates going to get lower to bring the buyers back? And the answer is probably not. We're really not expecting any additional rate cuts until maybe late spring, early summer is probably the earliest as to when that's going to happen. And a lot of the folks on the Federal Reserve are talking that there isn't going to be very much ado about that. We're not really looking at big rate cuts going into 2026. So that means if we're going to see pressure on prices, it's going to need to come from inventories. Based on the data we have now, I'm not as clear as I was just a few months ago that that's going to happen. I still do think inventories are trending up, and that will keep some pressure on prices. But overall, I still think that prices could be headed up this year, relative to last year for, the properties of average risk, we'll say. Themes going into 2026 are going to be that the inventory levels at least exist as opposed to non-exist. And hopefully that means everyone's a little bit pickier and willing to be a little bit more rational about the stuff that comes on. However, there still isn't enough, let's say, quality inventory for everyone that's out there to buy a house. There's still more demand. Yes, people are getting pickier, but a lot of the stuff that people want, they're willing to wait around for. That's really what the definition of being picky is. So they're going to take their time and make sure that they find something that doesn't have more risk than they want to take on. And really, that's probably going to be the story for 2026. I think the real wild card that's out there is there certainly is a chance that the job market could be much worse or could start to deteriorate in a way that makes things much worse, that would put a lot of pressure on the Federal Reserve to lower interest rates. And that could change both the number of sellers in a positive direction and the number of buyers in a positive direction. So, but right now, there's not a lot of support for that forecast that there's going to be a lot of economic stagnation and a lot of job losses. I think the job market's a little bit weaker than a lot of the statistics and the news reports that we get out there. But that's really just a gut feel. I don't have a lot of numbers to support it, and we'll just have to see how that all shakes out. All right, that's your report for January 2026. I hope you enjoyed it. If you do have questions about your particular town or your particular house, feel free to leave them down there in the comments, and I'll try to get back to you as soon as I can.